Markets have been rocked by the huge escalation in hostilities between the US, Israel and Iran. We did see oil appreciate naturally. Brent went 13. Gold did move higher. That topped out about 2.6% higher, finished about 0.8% higher. Other things that were a little bit surprising. We did see the dollar accelerate against most of the majors. And interestingly enough, it moved higher against the yen and the Swiss. Hello and welcome to ATFX. Well, what can we say about markets at the moment? Obviously, huge moves moving on the back of geopolitical concerns with the massive escalation we've seen in the conflict in the Middle East. US and Israel attacking Iranian targets. We've seen a big retaliation from Iran. They've hit US targets. What we're going to look at today is we're going to look at the reaction of two of the main players. Gold, obviously a massive safe haven play, and of course oil hugely dominates the economy in the Middle East, and how some of these trades could play out in the next sessions, days, and indeed weeks. Quick synopsis: talks broke down between Iran and the US. They were taking place in Geneva. Most of the market thought there would be some sort of compromise, but it really did escalate and escalated hard on the weekend. And that's where there's a lot of uncertainty coming into markets. We did see oil appreciate naturally. Brent went 13%. I think we saw nearly 12 out of WTI, which we'll be focusing on later. They both came in and settled around about 7% up. Gold did move higher. That topped out about 2.6% higher, finished about 0.8% higher. And for me and for a lot of market participants, not as much as you'd expect from gold, especially after the moves we've seen in since the start of 2026. Other things that were a little bit surprising. Now, we did see the dollar accelerate against most of the majors, and it did move high. It moved high against the euro substantially. It moved high against cable. And interestingly enough, it moved higher eventually on the day against the yen and the Swiss. Traditional safe haven plays. A couple of reasons for that. Swiss National Bank came in and said they were happy to intervene. That obviously pulled away a little bit of that potential Swiss move that we saw. Dollar yen, highly energy reliant, imports most of its energy, and we saw some big yen selling coming across the market against the dollar and against the crosses, where normally we'd expect to see a little bit of yen buying as repatriation flows come through. So without any further ado, let's go and have a look at both the gold chart and the oil chart. As always, please click on the subscribe button if you haven't done so before. We'll keep you updated with everything that's going on. So here we are on the very familiar gold daily chart. This is the big move, obviously, we saw from last September. Massive percentages up. We've already seen in 2026 a decent 20% appreciation. Here's that massive dip down we saw at the end of January, early Feb, all the way down here. And there's some interesting points that come up from this technical side of things. A nice move back up, and it's been respecting this sort of trend pattern and trend line to a certain extent over the last few weeks, really. So bottoming out, obviously down here underneath 4,500. The top level that we've seen is that just beneath 5,600. 55.94. Now, yesterday we did see a sharp move up. It did go, as I said, 2.6% on the day. It did open higher as well. If you bear with me in a second, I'll be showing you that chart. But here we are. And the interesting thing, it topped out here, high 54.18. Look at the high, not of the overall high, but the high there, 54.50 on the day. And the open was around about 54. So not too far away from those levels on the day. Could have been one of the reasons we saw some selling pressure. But as I said, I was kind of expecting it to see it challenge those all-time highs, maybe in short order, but we're still moving higher, but certainly in choppy markets. Bear with me a second. I'll just show you some of the moves that we saw yesterday. So here we are. This is the hourly chart. As I said, we saw some gapping on the open. Here you go. Looking at this candle that closed there on Friday, 52.77, open 53.66. So nearly $100 in there, 90. Let's be honest. Very choppy market. So this is something we have to take into account. We look at the daily chart. It gives us those longer term views. But choppy markets, it's been moving around. It does provide good trading opportunities within the range, but it is flying about. You need to have your capital management, have your risk management parameters accordingly adjusted, I suppose. So what we're looking at here for today, probably in the next few sessions, these highs, 54.15, There we go, 54.18. So topped out a couple of times there. That will be the target for the next few sessions on the top side. A break there could take us higher, looking to target those previous highs, and then all the way up to that move near 5,600. Support now coming in on that trend line around about 5,200. And here's a 200-day moving average. That's at 50, just north of 51.50. So interesting moves in gold. Obviously, if we see a further escalation, and I think the market isn't fully pricing this in, we could see a topside move, further break up, challenge those all-time highs. If this does not look like ending, and I think in the next couple of days, I think the market, especially maybe even in gold, is kind of bargaining on the fact that there will be a deal done, something will happen, and we'll see a de-escalation in this conflict. If we don't see this, I could fully see gold push through those levels. And as I said, then we're going to be targeting these all-time highs just under 5,600. A breakthrough there opens up the way past 5,600. 5,800s have been thrown out there. All sorts of topside moves could happen. I think, to be honest, the sharper move could come as well. If we see that escalation not occur, and if we do see a deal come, peace or a form of peace comes back to the Middle East, we should see this move correct itself back down to 1,600. But the trend is still up for gold. So longer term players will probably be looking to buy around these areas. Right, bear with me. We'll just go over to our oil chart and have a look how that's moving. And that is moving hard and fast. So here's the oil chart on the daily. It is massive. I don't normally feature oil in most of our stuff we do with ATFX. Probably should do a little bit more. Here's the much longer term for those massive moves that went into negative territory way back in 2020. I'll bring this into a little bit of sharper focus soon. Here's the recent highs. I think up there, this is WTI we're looking at, up around 130. I'll now bring it into a little bit sharper focus for us and give us an idea of what we saw in trading yesterday and what we've seen recently. So interesting for me, from a technical perspective, this level that we saw earlier just at the end of 2025, we based out just around this 55 level. As you could see, a bottom here back in April 25, bottom here back in May 25, low there you go, just by 55, 55.30, low here 55.12, and as I said, a low down there. I think I picked up the wrong candle there, but just around that 55.12 level again. It's been a move nicely back up, but it has been very, very volatile on things that we've seen in Middle East, on what we've got from OPEC. In general, the feeling for 2026 that we'd probably see oil prices decrease because supply was looking to overstretch demand. We've seen the complete opposite, obviously, on the back of these geopolitical and let's be honest, war in the Middle East. This was the move that we saw on the open yesterday. We closed, and it was interesting. I think this exacerbated the move, especially for WTI. This is a massive long-term trend line. That's why I tried to show you how far that went out. It had topped out just around that level on Friday. There you go. The close around 65.21. Bang. Opened $75. So it massively went through. There were a lot of some of the perpetual futures were trading over the weekend. They were trading up 73, 74. So we did see a big move. It did settle eventually up 6%. We're now trading around these levels, 71.30. This is Tuesday session here in the the Antipodes. So plenty more moves possible. Now, to be honest, top side, we're going to be targeting this high again. The next low is probably going to come down here where we've got the 200-day moving average around about 62. These are massive moves. These are massive percentage moves. The next target top side, there you go, 78, he says, trying to get in there, 78.40. That will be the next target. The target above that high, 80.77. Now, longer term, there has been talk that we could see moves back up to $100 in Brent, 95 in WTI. If this conflict accelerates, if it goes much further than we expected, if it goes into weeks rather than days, expect these moves to continue. They've got 750 ships stuck in the or outside the Strait of Hormuz at the moment. That doesn't look like shifting. Obviously, all sorts of closures going on in the Middle East. Topside moves, they will be hard, they will be violent. Equally violent as well is if we see what we've talked about in gold as well. We see a de-escalation, we see a calming of tensions, some sort of peace deals and accord coming through. It should take us back down to these levels that we've seen recently, round about these sort of 65 levels, but expect volatility to be massively escalated in the coming days, sessions, and even weeks if this doesn't look like going. We will be headline trading. Keep an eye on these bigger, longer term levels, but plenty of trading opportunities, obviously plenty of trading risks as well out there. So thanks for tuning in to what we've got. Loads going on at the moment. We'll probably follow up with a currency view on what's been going on as well later point this week. But thanks very much for tuning in. If you need anything from us at ATFX, please do let us know. Thank you.